Hey guys, welcome back to the channel. I really appreciate you giving me the time and clicking on this video. I'll try to make sure that I try to provide as much value as I possibly can, and maybe hopefully make you some money as well. So this talk that I'm going to talk about, I think this company has a potential to do 2 to 3x over the next 2 to 3 years. The company is reporting earnings on Tuesday, and I believe that the print is going to be really bad, potentially collapsing the stock 25 to 30%, giving you even a better entry point. I have a small position in the stock. I'm planning to increase my position on Tuesday. Hopefully I do have a considerable position already, so I'll double down, actually triple down, if the stock comes down to a certain level that I'm going to talk about in this video. So the stock that I'm going to talk about is DBox. The ticker symbol is DBO. It's listed on Toronto Stock Exchange and also on the OTC platforms in the States. So the stock is up 97% year to date and almost 227% in the last 1 year. But we're going to discuss some targets in this video as well. So first of all, let's talk about what DBox does. So DBox basically, DBox is a leader in design of haptic and immersive technologies. DBox creates and redefines haptic and immersive entertainment experiences by moving the body and sparking the imagination through motion, vibration, and textures. So most of their business is most of the seats that they sell here. We'll just go through these, like how the seats work basically. So most of the seats that they sell here, they're sold to cinemas, and that they are the primary customers for them. They've also gotten into sim racing as well. So the seat basically has actuators at the bottom, and it moves with what's happening on on the screen itself. So say you're in, with Fast 5, there's a car here, and as the car goes, the seat will start to go back as well. It could create a force of up to 2G of forces. So the seat that will roll and vibrate and move 1.5 inches, but it delivers 2 Gs of force. There's you can kind of shift the levels of the intensity of the action, so the seat moves as much as you want it to be honest, over a 4 mode place, and you can kind of turn it off as well if you don't like it and if you're having motion sickness. So it kind of gives you the experience that you're actually in the movie and you're enjoying the movie. I watched Suicide Squad a while back on DBox, and when the helicopter was going up, the seats started to move up as well, so you almost felt like you were in the action. And then when there was shooting going on and the actors were ducking left and right, the seat also started to do that. So it's a really fun experience, and the incentive for the cinemas to have these seats is the ARPU. So average revenue per user goes up significantly because these seats are expensive than your normal tickets, right? So since the pandemic, the very foundation of the business for these cinemas has been impacted severely. So any way they can increase their revenue, they're going to do that. So that's been the reason why there has been a certain resurgence in DBox seats again, and they've been growing revenues quite a bit, which we will talk about as we go forward in this video. The trends for DBox as well as sim racing have been going up significantly. Now the trends for DBox, this is year over year comparison, so you'll see it start to go quite parabolic here in March as well as in May and June. The reason we'll discuss this, mostly this business, they have royalty portion to the business, so the royalties go up when there's successful releases going on. So from January 1st to March 2025, the quarter that I think is going to be really bad for earnings. The reason is mostly there weren't any successful movies that were released, but from April onwards, there's been some really blockbuster movies that have been released, and even going forward from June onwards, there's some really nice releases that are coming out up till the end of this year. So that's going to be the reason why they're going to do really well here. So as I said, the primary customer for them is the screens. So Cinemark in USA is one of their biggest customers. They are in 500 screens, and they've recently going to expand to 70 more screens, which also helps them. So the revenue is broken down into system sales and right of use, rental, and maintenance. So the right of use, rental, and maintenance, this is basically the royalty income. So every time someone goes to a Cinemark or a Cineplex where the DBox seats are available, you actually every time you purchase a seat, DBox gets some of that revenue as royalties. So that's the one thing that's very interesting for this business, and this is one of the reasons why I love it so much, because you'll see the system sales have been flat. I mean, you had this Q3 which was huge, but this is kind of lumpy because they had almost 51 screens that were installed in this quarter. 51, so they were installed on 51 different screens in this quarter, and that's why we had that huge bump. But it's quite lumpy. You won't see any consistency in here. But the rights of use and rental and maintenance business has been growing significantly, and that is the reason why their EBITDA has expanded so much, right? You can see the direct correlation between this rights of use business and the EBITDA and the net profit. So in this specific quarter here, you'll see that the right of use business, the royalty income was only 2,400, and the loss here was 316. Now some of this is skewed by foreign exchange as well, because the Canadian USD foreign exchange has been impacted significantly as well. But you'll see like this portion of the business significantly goes down to the net profit, and that's the reason why this company has been doing really well recently, because the royalty side is high margin business. You get 80-90% gross margins. So in every piece of seat that's sold, if the slate is really good, if there's a lot of successful movies coming out, DBox makes a lot of money from it. So instead of like buying AMC or like any other companies, you can bet on DBox, which is great because they have a direct correlation, and this company is only $65 million market cap in Canadian dollars. So there's a decent amount of upside from this specific company. So yeah, so like as you see here, the system sales have been consistently going up as well, but they'll probably start to plateau a little bit here because there's only so much they can grow, right? They did win a new contract with Cinemark. So they already, as I said, they're already in 500 screens. Total screens installed is 1,000, and they basically got a new contract of 70 more screens. So a big question around this company could be, what is the sustainability? Like how far can they grow, and like is there like revenue concentration risks and stuff like that? Yes, there is some revenue concentration risks, but the thing is that the screens continue to expand. Like Cinemark, who's their biggest customer, like for almost 50% of their total screens that they have installed, keeps on buying more screens. So that shows you that this technology is really, really good, and that's the reason why they just keep on buying more and more screens. So I believe going forward, this would be the baseline for your income. So like this quarter, Q2 is probably the baseline. The reason why I'm saying this is because these 70 screens are going to be installed over a 6-quarter period. So from Cinemark, they'll probably get around your 12 to 13 screens. In Q2, they installed around 22 screens. So I'm saying like and we know that Cinemark is 50% of their business, right? So if we say on average they install 12 screens per quarter, and if you multiply that with 2, you'll get 24 screens per quarter basically. And in this quarter, we know that they installed 22 screens. So like barring getting a big contract, which they could, and that could be another leg for this stock, right? With 24 screens per quarter, we can say that they'll probably do around this net profit. I'm not going to rely on because this was like a foreign exchange tailwind that they got in the specific quarter. But you look at the adjusted EBITDA, like you're probably looking at $2.5 million of EBITDA per quarter. So you're looking at $10 million in EBITDA. And this company has only $65 million of market cap. So it's trading at almost 6 times EV to EBITDA, which is not that expensive for a technology company, because yes, they do sell hardware, but this is at the end of the day a technology company with royalties being a huge part of their net income, right? So I do believe that this is where the baseline is going to be, and we'll look into some valuation analysis as we go forward as well. So the other thing that I did here, and the reason why I'm saying that the earnings coming up for Q4 are going to be really, really bad is this. So here is an analysis of the most successful movies as per the quarters that are for the company. So over here we'll see these directly correlate with the royalty income, which is the main driver of profit here. So Q3 2024 is where we're looking at the first quarter here. So that was around 2 billion. So this is the 5 most successful movies grossing for that specific quarter. Let me just put that this way. So yeah, so here you'll see here Q3 2024 they did this much revenue, around $2 million in royalty income. And then in Q4 2024 they had some really big releases here. Dune Part 2, Godzilla, Kung Fu Panda, all of these movies quite suited for DBox. You'll see there was a surge of almost 15% of revenue in here. And then the next quarter here, Q1 2025, pretty decent, famous, successful movies. They got Bad Boys, Inside 2, perfect for DBox. Another huge surge in this quarter here. Sorry, this is the quarter I'm looking at. My bad. And then Q2 2025, there's another huge surge right here, right? Like they see this revenue almost for the top 5 grossing movies. Obviously, there's other smaller movies as well, which would have driven incremental revenue. But these big companies, big releases make up most of the revenue anyways, right? So you're looking at a huge surge here as well. Obviously, there's going to be another kick as well based on the number of screens that have been installed. So like if the revenue for the highest movies has gone up, the screens have also gone up from like 900 to 950. So there's going to be an incremental increase of 5 to 6%. Plus, if the prices go up, that there's an incremental boost from that side as well. And then here in Q3 2025, this is the quarter here. You'll see this number and this number is almost flat from Q2 to Q3, and that's what has happened with the royalty income as well. This is also flat, but year on year, you'll see this was almost double from 2 million to 3.5 million, and that's what we'll see here as well. It went from 1.4 million to 3.1 million, right? So there's a direct correlation for the royalty income based on what kind of successful companies are being released. Now, this is the biggest issue here for them coming up in this quarter. There was no huge movies that was released. Captain America was, one of the most, movies that was expected to do really, really well, but it did not do as well, and they only ended up doing $400 million in revenue, and that was the most successful movie in Q4, technically Q1 2025, Q4 for the company, Q1 for just normal people, I guess. So yeah, that was the biggest, and the drop off is huge. So I looked at AMC's top line, and AMC's top line for Q1, their Q1, I guess Q1, so from Jan to March, was 40% lower than Q4 2024. So like, just going by that, I think, or maybe we can just rely on what happened here. So potentially this quarter you'll see the net income, or like the profits come in at like 8 or 9, or like net revenue is going to come in at $8.9 million, or like $8 to $9 million, which will be a significant step down from this Q3 results. But Q3 was an anomaly, one, and then two, the royalty income is going to be significantly lower in Q4 because of this really bad release schedule. But if we go into Q1 2026 for them, this is the period of April to now, which ongoing quarter of up till June 7th. This quarter has been amazing for movies. There's been some really successful movies that have come out: Minecraft, Lilo and Stitch, Mission Impossible, Thunderbolts, Sinners, Final Destination. All of these movies are still in theaters, so they're still grossing a lot of money. You're potentially looking at what happened here in in Q3 2025. So I think you'll definitely get around $3 million in royalty income for Q1 2026, and then going forward, there's a bunch of really famous movies, really highly anticipated movies that are about to come out as well. This is a list of them. I can go through. So yeah, like I know, like the Fantastic Four movie is coming out in Q2 for the company. There's How to Train Your Dragon. This is one movie that's like really exciting as well. Elio, sorry. Bad Guys is coming out. The Naked Run is coming out. Superman is coming out, and there's a really nice slate of movies coming out for the rest of this year. And I think that, as I said, like around 12 million is going to be the baseline, and they'll probably do around $50 million of net revenues for this year. That puts us at so normalized revenue. I said they could potentially go up to 65 million just if there's like another contract. The market capitalization right now sits at 65 million, so it's trading at 1x revenue, which is criminally undervalued in my opinion. And I think with normalized net income going forward, as they're focusing on maximizing net profit and also reducing operating costs and stuff, I believe the net income is going to come around at $5 to $6 million. So you're trading at 10 times enterprise value and only 1x revenue, or 1.2 times revenue. So I do believe the buyout price for this company is probably going to be around $130 million to $190 million. Just like three or four times revenue is not that huge for this type of company, and it's a pretty it's a very valuable asset, especially for someone like Cinemark, who keeps on giving them more and more revenue. They're 50% of their client base, so it would be a very synergistic acquisition for them. Cinemark only has 5,500 screens right now, so they're only installed in 10% of it. And I mean, as I said before, the reason why Cinemark keeps on installing more DBox seats is because they do see some benefit from it, because otherwise why would they, right? So if this growth continues, and then there'll be an upgrade cycle where they have to replace the old seats with the new seats, and that's going to drive incremental revenue going forward as well. So as I said, $20 to $15 million is probably going to be the baseline, with some bumps here or there. And that puts us at around $50 to $60 million in revenue. You're trading at 1x enterprise sales, like sales times enterprise value. So there's a lot of upside here. I do believe $120 to $150 million is the baseline, and you can probably go up to like almost $200 million, which will be $1 per share, giving right now around 300% return. But the thing is, though, the best scenario, I guess, in this case would be if the stock was to collapse on the 10th of June when the earnings come out, because the stock is highly illiquid, and there's a lot of people who don't really understand the company, and they've just bought because someone shared it to them, or like it's just going up, so that's why I'm going to buy it. So there's a high probability that the stock drops on the 10th. At that point, I'm just going to put in limit orders. The stock closed at 30 cents Canadian on Friday, so I'm going to have my limit orders in at 24 cents as well as 20 cents, and then all the way down to 15 cents. Right now it's a 1.5% position for me. I'm willing to take it up to 4 to 5%, because I do believe the risk reward is such that it just makes it more attractive. Hope you liked that video, guys. please, thanks so much for watching, and please subscribe to the channel. It really helps me out. I'll see you in the next one. Take care. Bye.